Hello, traders and investors, and welcome back. My name is Roger Scott, and I'm the Senior Strategist for Wealth Press. Today is Wednesday. It's July 5th. It's the day after the 4th of July, the holiday week. Now, I wanted to say holiday weekend, but it really wasn't a holiday weekend. It was a fragmented day, which is, I hate when people have a nice holiday and then they have to go back to work middle of the week, which means a lot of folks are taking today off. Now, I'm already getting started. Before I get too far advanced, make sure to like our video, subscribe to our channel, go to YouTube Wealth Press channel. My comments, please post comments there. And most importantly, I've opened up my VIP room to the public for a very limited time to get you guys the second part of this video intraday as the markets open. Plus, I give hot tips, hot stocks, options, all the goodies. Subscribe on this page. And if you're watching on the YouTube Wealth Press channel, there's a link below. It's free and it's happening at noon Eastern time today. Also, make sure to post comments. I love reading your comments. Now let's get into all of this. What are we wasting our time for? So as you can see here, the Nasdaq is, and keep in mind, as I say this, we are still in a fragmented market. As you can see here, yesterday was a holiday. Most people, the majority of hedge fund guys, took Monday off. And Monday was a half day to begin with. Not expecting a lot of money to come into the market, which means the algos are going to have a field day probably till about midday tomorrow, maybe even Friday. A lot of traders are taking this entire week off or coming in not today, but tomorrow or Friday. It's just the way it is. People don't want to leave town. They don't want to go out of town for 3 days, then have a holiday, and then come back the next day. It's not realistic. And it's one of the biggest holidays in the country, so there's going to be some fragmentation, which means the moves are going to be exaggerated, both to the upside or downside, because you have algos hitting these sectors and stocks, and at the same time, you've got low liquidity. So it's a perfect recipe for algos to start distorting the market and do their shenanigans, if you will. Now, you've got factory orders coming in today, but most importantly, you've got FOMC minutes at 2 o'clock, and the OPEC meeting begins today. Now, what's interesting about the FOMC minutes is last time the minutes looked totally different from Mr. Squirrely, aka Powell, was saying. But in this case, I don't think he was really overly bullish or bearish. I think he was pretty much on the dot. He said they're going to keep raising rates. And he also made a very interesting statement, which I kind of liked. He says, basically I'm paraphrasing, but the timing of what we do and what we do are two different things, which is what I was saying. It doesn't, raising rates 10 times in a row, by a quarter of a basis point is the same thing as raising rates 5 times by half a basis point. So it's not like, we still have 5-6 months left of this year. It's not like he can't be flexible and say we're not going to raise now. We are still in an inflationary market, and that's what you need to take away from this. And that means we have to be very careful with specific type of stocks that I'll talk about today in just a few minutes. Now, keep your eye on the bond market because the FOMC can have some impact. And if the Fed says, well, we're going to raise rates, but we don't know if they're going to be a little mysterious about raising rates, and with the tech starting to cool off, we may see some flight to quality with money moving into the bond market. It's having a very, very hard time moving higher, but at the same time, it's having a difficult time moving lower. One thing that may influence the bond market is volatility. Now, beginning of last week, right around here, when volatility bottomed around 13 something, I said that I think volatility is going to start moving up, and it finally looks like it is moving up. It's starting to break out. Now, what I'd like to see is, and remember what I told you, I said I'd rather get a bad fill, but get it on the way up because it could linger here for a while. Well, I think this week we're going to see some more downside, and I'll talk about all that in a minute. But basically, with what I'm about to talk about, I think there may be a breakout right at this level at 15. So it looks like we're heading there, and I think we're going to go higher. And I would just buy options, but I think there's a fairly good case to be made for volatility breaking higher because, as you will see, there's a lot more weakness to come in the markets than we can expect, and I'll show you something. First of all, number one, this is my stock fetcher code. I want you to guys see something. These are my 11 sectors. Let's look at them This is them over 6 month, 3 month, and 1 month. You could see here, consumer discretionary is now number 1. Technology and communication are number 2. But let's take a closer look. Let's look at the last 30 days. This is just the last 30 days. Look at where technology and the communication services are. Remember I said basic material industrial will overpower them? Financials are stronger. Real estate is now stronger over a 1 month period of time. So these, if they're coming down on a 1 month basis, they're going to continue coming off. And I think consumer discretionary is next in line. I think that's the next one to go. I think consumer discretionary doesn't have as much exposure to technology and chip stocks. That's the only thing that's holding it up. But the relationship, for example, let me give you an example. Look at what stocks are the strongest stocks in the consumer discretionary sector, and you tell me if you think that they're going to stay up. Here, let me go to constituents. Amazon and Tesla. Do they look like consumer discretionary stocks, or do they look like technology stocks to you? They're technology stocks, of course. Of course they are. And they have over 23 or 24% of this index. So, folks, Amazon and Tesla, and you've got other tech stocks. You've got, well, let's see here. Maybe you don't. eBay, there's eBay right there. That's a tech stock. You've got Garmin, that's a tech stock. You've got Best Buy, that's a tech stock. None of these CarMax, oh, no, not CarMax, sorry about that. Etsy is more of a tech stock. You've got tech stocks in here too, especially Amazon and Tesla. These are tech stocks. Now, is Tesla a tech stock or is it consumer discretionary stock? Is Apple a tech stock or is it a consumer discretionary stock? What about Amazon? I mean, we could have a debate about Amazon being a tech stock or a consumer discretionary stock for the next 3 days, and we wouldn't be able to figure it out. But the point is, if you look at the Nasdaq 100 as a whole, this is the number of stocks in the Nasdaq 100 trading above the 50-day moving average. Look at a 5-year chart and look at where we're at right now. You really think we're going to rally from this point? Now, let me show you telecommunication. This is the 20-day. Now, let me show you telecommunication over 50-day. Here. Look at that. Let's do the same thing for Infotech. This is Infotech on a 20-day, and this is Infotech on a 50-day. Let me show you Infotech on a 50-day. It's even higher. Look at this thing. So we are as overbought can be. And if you look at consumer discretionary, which is still moving higher, you will see, look at this. Look at this level here. I mean, I haven't even drawn this yet. Look at that. Here, let's put it at 90th percentile. I mean, this is the last 5 years. Once, twice, 3, 4, 5, 6, 7 times we've been past this level. And that's the 20-day. Let's look at the 50-day. It's important that you guys really see this with your own eyes right now, because these are historic levels right now. I mean, look at that. So, and here's the more important part: momentum levels are coming off. Momentum levels on this. Look at it. Let me show you something. Look at it 1 month ago. Look at communication, consumer discretionary, and technology. They were all up here, right? Momentum levels were up here too a month ago. But we're overbought. But now we're back up here. But these are all the way down here. That means even less. Listen carefully. That means momentum levels are narrowing. And there's even less stocks than a week ago or a month ago or 2 months ago that are causing it to go higher. So not only are these assets pretending to move higher, but it's literally like 3 or 4 stocks that are just causing it to go high. And at these levels with the whole Nasdaq, and most importantly, remember, we're up, momentum levels on communication are up here, but price data isn't. And I told you last week that I think we're going to come up, pretend we're breaking higher, and then go lower. Look, we can't even get up to this level anymore. So momentum level is cooling off, like really, really cooling off. And that's going to cause downside for technology stocks. So keep a very, very close eye on this, because it looks like basic material and industrial are starting to overcome communication services and technology. And if it's happening on a 1 month basis, there's a really good chance it's going to happen further on. Keep your eye on consumer discretionary. It's just a matter of time. Because if tech goes down, do you think Amazon is going to stay up? Do you think Tesla's going to stay up? If the Nasdaq 100 has a 20% move to the downside, do you really think consumer discretionary is going to stay up? Come on. So keep your eye on volatility right now. If volatility breaks through, I was a little early, I said it right here, but it is higher already. But if volatility breaks up, we may see some downside in these stocks or a simultaneous downside in telecommunication, technology, and possibly consumer discretionary, and at the same time, volatility moving. If the Fed doesn't have anything really negative to say about the bond market today, if there's no major surprises, we may start seeing some more upside. Most importantly, remember, it's still a fragmented period. This is a holiday week. Don't expect major volatility to start up and liquidity to start up till midday tomorrow at best, or maybe Friday. It's going to be a slower week than usual, exaggerated moves. I'm treating today like a Monday from a holiday week where Monday and Tuesday are really slow. Well, this is like Monday and this is like Tuesday. So things get really heated up on Wednesday, which by that time will be Friday. We'll have employment data. Probably tomorrow afternoon, we will see normal liquidity. Till then, be really cautious. Be really cautious. Now, let me give you the news, and then I'll bid you goodbye. But remember, this is important. Momentum levels are narrowing. China's faltering economic recovery is awaiting Federal Reserve policy meetings for the FOMC, for the minutes right here. They're waiting for that. Everybody and their mother is waiting for that data right now. It's very, very important. In Monday's session, tech-heavy Nasdaq notched a 2-week high during holidays. Not momentum levels, they didn't. Nope. Tesla surged. Regional banks did well. Economic data on Monday showed that the manufacturing index, remember I said manufacturing and industrial should also cool off. The Dow's also a bit overdone, fell to 46 in June, weaker than the expectation of 47.2, contracting for a 7th straight month. The June S&P Global Manufacturing was in line with expectations. Futures are pricing in an 86% chance that a 0.25 basis point rate hike will happen at the next meeting, which I think is very likely. I can't wait to hear what the Fed will say today in the minutes. Well, what the minutes will show, not what they will say. But so far, it's pretty much in line. I'm not seeing as much of a distortion as we did last time. China announced that it would control exports of some metals widely used in the semiconductor industry, adding more uncertainty to the global trade. Well, America says we're not going to share goodies with you. China says we're not going to share metals with you. It's just how it works. Today, we're going to see the minutes from the meeting. Factory orders is coming out today. In China, losses in mining and financial stocks are leading the overall market lower. Their service activity was weaker. Today closed lower after data pointing to a slowdown in the country's service activity, while escalating the U.S.-China tension on sentiment due to chips. A private sector survey on Wednesday showed that China's service activity expanded at the slowest pace in 5 months. And that's 5 months after COVID is behind us, allegedly, due to weakening demand that affected post-pandemic recovery momentum. How can it not? After 3 years of having COVID, China's major economic drivers are losing momentum. Meanwhile, an influential trade policy advisor said Wednesday that China's export controls on metals used in semiconductor productions are just a start. We don't need this right now, folks, highlighting the availability of additional sanction measures and tools at the country's disposal. It would be the stupidest thing right now for U.S. to get into it with China. It would be the dumbest thing for global economy. I mean, the dumbest thing possible. Data on Wednesday from Japan indicated the resilience of Japanese economy as service sector activity expanded further in June. I'm really bullish on Japan. I don't know if you guys know that or not, because of their new prime minister. Netflix gained. Look for upside on Netflix. Steel Dynamics went to the downside. Borg Warner was downgraded, and no major earnings today. Now, listen and listen good, folks. Remember something. Follow the links. Get into my VIP room today at noon. No cost. You could find the link in the YouTube Wealth Press channel. And most importantly, I got something really good for you guys. I want you to join me today. That's right, today, Wednesday, the 5th of June, after the holiday, as we return to trading after the holidays. Not only will I teach you my #1 strategy to dominate July, but I also want to give you our Stealth Surges seasonality calendar for July. A lot of people asked for this one. On the calendar, it'll highlight very, very important dates for the month of July for certain stocks that have shown to surge on the same day this month, year after year. 10 years, 20 years, the same period. You guys definitely want to get in on this. Make sure to link the link below. That's right. Sign up to save your spot in today's 1 p.m. Eastern session. 1 p.m. Eastern Time, right after my VIP room. I'll also post a link in the VIP room, which again is available for free, no cost. Get your analysis on in my VIP room at noon. Link is either above or below this video, whether in the YouTube Wealth Press channel or our page. Have a great week ahead. I want to say week ahead, but there's only today, tomorrow, and Friday, right? Remember, we're starting off slow, exaggerated moves. Keep your eye on the bond market, volatility, technology stocks. They're going to be the big telltale sign this week. I hope you guys have a great day. If you guys want to send me an email, support@marketgeeks.com. Bye.